So modernizing core banking is a very hot topic, mainly because of three key factors. Um, One of those is that all technologies that are being still used, but also hitting the end of life and bringing supportability challenges, skills challenges, making it complex and slow to change the context of the bank, makes it harder to integrate with partners, whether those are financial service or non-financial service industries, and basically limit the abilities to create new business models and provide new services. Another area that is driving modernization is customer expectations. If the products and services and experience provided to customers, whether they are retail or business customers, it needs to be up to the expectations. And nowadays is much easier with so much competition for customers to move their relationship to other banks. And lastly, but not least important, actually probably the most important, is the changing regulatory environment and also the concerns with security. Uh, this is driving the need for systems to be kept up to date, to be kept secure, to meet the regulatory requirements, whether they are related to security or privacy or even sovereignty. So there's probably more factors, but these three, the old technologies, the shifting customer expectations, and the increased challenge with regulation and security are probably key drivers in the modernization. So what can leaders realistically expect when updating their core banking system? It's not an easy task, and I probably would call out three common themes that are very common. One is that experiencing technical challenges and having a progressive modernization journey is something uh, to realize up front. There will be unforeseen technical hurdles. Uh, Change will be progressive, gradual, rather than flicking a switch, and that's just the nature. And banks just need to be conscious of this. A second factor to be taken into account is that there needs to be an element of business change management. So the existing systems, together with the way the products and processes have been set up, um, that may not necessarily fit with the new technologies being brought into the organization or the ways of doing things. So, looking at the way these products and services are set up, streamlining operations, reviewing processes, and improving efficiency needs to be done in conjunction with technology change. Technology is only as good as the processes and the services fit in, and old technology also reflects old ways of doing things. So this does need to be looked at. And related to this, a third factor that I probably would call out is that people and culture, organizational culture, does require an element of change management, because all this of working will be deeply embedded on the organization. So what will customers miss if they don't update now? Again, you could call out quite a lot of different things, but I believe that there's two important areas to consider. One is the agility and ability to change. So by not modernizing, it does become harder and harder to adapt to changing regulations, to customer expectations. Competitors will be leveraging new technologies and working to attract customers and offer innovative services. So this will translate in a decreased business volume and revenue streams over time. There's also another factor, which is increased operational costs and risk, because maintaining aging systems does become more expensive over time. And things like security vulnerabilities can lead to costly data breaches and security breaches. And there's both a regulatory and a credibility impact that does need to be weighted. So these two things really should be seriously considered when banks are thinking, oh, maybe I can do it later.